Hi, this is Ian Coleman. This is this week's video analysis for the dollar index and FX majors going into the 17th of September 2018. Similar to last week, we're going to concentrate on the dollar index because we do believe that this is going to be the sort of driving force of price action next week, and then we're going to break down into shorter time frames in the other FX majors to highlight what we're looking at this week. So the dollar index has actually got sort of conflicting views, and we're going to explain why, and then we're going to talk about where we believe the short-term move is going to be this week. So weekly chart, 5-wave Elliott wave pattern to the downside, very impulsive move higher. We don't think this move higher is finished over the long term. We actually think we're going to move lower and then move up, maybe up towards this big figure at 100 and close to this 78.6% pullback level. But obviously in shorter time frames, which is what we're concerned about at the moment, we've got an evening star formation here, this 3-wave pattern. Now that often signals the top of a trend and a reversal in price action. However, price inside the weekly Ishimoku cloud last week has found buyers, and if we break down into shorter time frames, we're going to go to the daily chart, and again we've got a bullish Elliott wave pattern, this time completing up here. We've stalled and we've actually posted what's known as a bullish outside day on Friday. Now that's a little bit similar to an engulfing candle, but it actually takes out the whole of the previous day's price action, not just the body, and that is normally quite a good reversal candle. So like I said, the long-term bias off that evening star formation on the daily chart should limit buying. We've got trendline support at 96.18. Now if we break down to shorter time frames, this is the 4-hour chart. This was that bullish outside day that we saw on Friday. Now we've got some bespoke resistance at 95.11, so immediate buying at the beginning of the week, Monday, could be limited. We'd actually look to buy into dips. 94.80 is our bespoke support, and if we look over here, it's been quite a pivotal level last week. To the upside, remember we said 96.14 was that trendline resistance, and that's in between the 61.8% pullback level, around about 96 the figure, and then this 78.6% pullback level at 96.42. So the immediate bias for me is buying dips, but in a corrective move higher next week, and really expecting price action to be mixed and volatile. So breaking that bias down into other pairs, weekly chart, reverse of what we've seen in the dollar index. This is a morning star formation, and we move to the upside, but again sort of levels around about 117 the figure are being sold into. If we go down to this time frame, and this is the daily chart, we didn't quite post an outside candle on Friday, but it is a bearish engulfing candle. To the upside, we've got resistance at 116.50, and to the downside, we've actually got first support at 116.05. So again, we're not really looking to sell into the open on Monday. We'd actually prefer to sell into rallies. If we look across here again, we can see that that level has been quite pivotal. To the downside, previous support is around about 115.08, and then we've got the Fibonacci levels here, and then trendline support here. What we are expecting, or what we're looking to form, is possibly a reverse head and shoulders. So this will be the left shoulder, this will be the head, and then this choppy price action lower is going to make the right shoulder before we continue that corrective euro dollar move higher. Sterling dollar daily chart's quite interesting. It clipped the top of a channel formation around about 131.63. Going into next week, we've got short-term resistance at 130.90. We've got short-term support at 130.40. So we could quite easily bounce early Monday into resistance. If we go to this chart, so just remember 130.90. This is the intraday, the 4-hour chart. We've broken this trend of higher highs to the downside. what has a tendency to happen is a retest of the breakout level. So 130.40, if you remember, we said was support. Again, that's been quite pivotal. Scope for a move higher to then retest the breakout level, and we've just highlighted that bespoke resistance at 130.90. So again, maybe choppy price action at the beginning of the week. We've got pretty solid support to the downside at 129.76. Dollar Swiss, we're still bearish in dollar Swiss over the medium term. We have reacted close to the 50% pullback level at 96.27. We've got bespoke resistance at 98.21, and that's pretty close to this swing low, which was posted on the 4th of June, or week 4th of June. The swing low was 97.88. So basically, what was support becomes resistance. So we are looking for rallies to be limited. If we look to the intraday chart, and here we've got the potential of sort of disjointed, if you like, treble bottom formation. If we break here, then the measured move target would actually be 98.60, with that medium term resistance sitting in between there at 98.21. So at the moment, we're really going to look at price action at the beginning of the week to see what happens in this this currency pair. But I think for the short term, we're going to see a corrective move higher as the dollar moves higher. But I think intraday trading is going to be pretty hard in this currency pair. Dollar yen. Most important chart is the daily chart for us at the moment. Moved to the downside, then stuck in a channel. We broke the channel formation to the upside. A full AB equals CD formation will take us to 112.45, which is this 78.6% pullback level, and will in turn, if it does hold there, it will form a bearish Gartley and then flip the dollar yen to the downside again. So going into next week, we've got reverse trendline support at 111.64. We've got our bespoke support at 111.61. So that's really the area that we'd like to buy dips into, if you like, for the next move to the upside, or what we expect to be the next move to the upside. Dollar CAD. We highlighted this on Friday. 1, 2, 3, 4, 5 potential 5 waves completed. Again, there's scope for some sort of short-term volatility. We've got bespoke resistance at 130.72, bespoke support at 130.13. So maybe a move higher, then clipping into back down to support for another move to the upside. And again, if we pull the chart across this area here, 131.60 looks prime for a recovery rally in dollar CAD. Now, Aussie dollar, I think, could maybe buck the trend a little bit next week. If we look here, and we've not closed this month yet, obviously we've got a breakout of this very long-term trend support, 72.10. So if we can close this month above 72.10, then it will basically be a false breakout. If we go to the weekly chart, we can see an ending wedge formation, broke, retested, and then moved to the downside. We've now stalled around the 78.6% pullback level, which is 71.04. Now, here, which is the 4-hour time frame, there's potential for a reverse head and shoulders to form. So support around about 71.40. The only reason I'm sort of not too keen, if you like, on this pattern is A, it's not formed or completed yet, and B, I've got no support here. I've only got resistance up here. So sort of for me at the moment, I would still look to sell into rallies, but I'm obviously looking for to see whether or not this formation holds. We've got the RBA minutes very early UK time, 2:30 a.m. UK time on Tuesday morning, so that will be something to look at. Talking about Aussie crosses, I mean sterling Aussie, euro Aussie, they're at well 2018 highs, that's for sure. So those cross currencies are looking overstretched at the moment. So it was interesting currency pair to watch next week. Euro sterling, and I think this time frame is most important. The daily chart, we broke the expanding wedge formation to the downside. The measured move target is here around about 88.55. That's just short of the 61.8% extension level of this wave, which is at 88.38, and then we've got bespoke support at 88.04. So bearish outside day posted on Friday after 3 days of pretty mixed and volatile price action. At the beginning of the week, 89.22 is our bespoke resistance. Like I said, support is down here at 88.04. Euro yen, quite a hard one to sort of analyze or decipher at the moment. We've got one decent support level going into next week, which we're going to discuss and really see how price action acts around there. Rejected or prices above this corrective channel formation have been sold into 130.28, so we just about closed below there on Friday. Now, interesting fact here is that we've got the Marubozu level from last week's price action, which is the midpoint from the open and the close, and that's located at 129.23. If we go to a shorter time frame, this is going to be the 8-hour chart. We broke out of the channel formation to the upside. Reverse trendline support is 129.39, and then we've got our bespoke support at 129.33. So very close to that Marubozu at 129.23. So at the beginning of the week, I'm expecting some sort of downside pressure, and then we're going to look at this area of support to see whether or not it holds, and we get a decent bounce to the upside. Okay, good luck this week, and we'll speak to you again soon. Many thanks. Goodbye.